Lisa, the stock market reaction to this, no surprise, maybe we've seen weakness and softness in the banks pre-market. And with questions about growth in the economy, growth stocks and tech stocks usually catch a bid. Is this how you want to be positioned? Is this the reality of the market?
Well, we really are taking a more balanced approach right now, and certainly the bond yields dropping are a sign that I think we need to continue to look at. But the reason we really have a more balanced posture is you do continue to have good overall economic growth figures. And while we have had some individual indicators come in a little bit soft, if you look at a broad array of indicators, what we continue to see is healthy absolute levels on most of those factors, as well as continuing trend in growth. So that really is supportive of a continuing reopening story. And the reason why we, in addition to that, would continue to emphasize some of the more secular growth stories is, to your point, there are some mixed signals on the horizon. So we really feel like having a little bit of diversification in both camps makes some sense.
Yeah, the banks really pressuring Dow futures right now in terms of impact. Rick, what are the key levels to watch here during the session?
Oh, that's the easy part. 2012, 2016, at the time were the all-time double bottom yield lows. Well, they're not the double bottom anymore post-COVID. 50 basis points is the all-time low. But we really want to pay attention to the whole zone of 1.35% to around 1.37%. And if we close the week below that zone, I think a quick retest of 1% is in the cards as we flush out many months of positions looking for even higher yields than we attributed ultimately when we started to dip under that 165 level.
So basically you're saying by the end of the week, if we don't move higher by 5 to 7 basis points or so, then we're doing a quick test of 1.
Yes, that's the way it looks on the charts, and that's the way it sounds around the water cooler.
Lisa, a test of 1 sounds like that would be real trouble for the stock market. What do you think? There's this push-pull dynamic because 1%, what does it say about growth prospects or the perception of growth prospects? And what does that do in terms of a tailwind for tech stocks, which are the market leaders?
Absolutely. So I think if we get some low test here on the 10-year yield, certainly that's really going to favor some of those secular growth themes as well as the tech stocks. And to Rick's point, if we break some of these key resistance levels, that could lead to further action within the bond market. And really, ultimately, though, if you just pull back and say, what's the ultimate story? It is that we've got a dichotomy really going on here. Equities are telling us that they're positive on forward prospects. We've had a great run through 2020 and through 2021 year to date. And yet the bond yields are really showing more skepticism. And while inflation expectations have tampered down in recent weeks, they've stayed relatively stable. So what we're really seeing with this nominal yield action is really real rates dropping to fairly low levels. And again, to your point, Melissa, that's really showing some, nervousness about really what levels of growth can be going forward in the economy.
Shepard Smith here. Thanks for watching CNBC on YouTube.